Hold on. What if I told you that a massive tax revolution just hit America, potentially slashing your bills by thousands or blindsiding you with hidden pitfalls that could wreck your retirement dreams? This isn't hype, it's the real deal, shaking up every paycheck and nest egg in 2026 and beyond. And if you're not clued in, you could be leaving serious money on the table. Before we unpack this game changer, do me a favor, smash that subscribe button for more eye-opening financial breakdowns and drop a comment below letting me know if you're a tip earner, overtime grinder, or nearing retirement. Your stories fuel these videos. All right. Buckle up, because the U.S. financial landscape is undergoing its biggest transformation in ages, reshaping how we tackle taxes and build wealth for the future, impacting virtually every American, from entry-level workers to seasoned pros. To kick things off, let's tackle the burning question: why this epic overhaul right now? Essentially, the old tax framework was barreling toward disaster. The 2017 Tax Cuts and Jobs Act, or TCJA, had built-in expiration dates looming at the end of 2025, threatening widespread turmoil if nothing was done. Lawmakers stepped in with the One Big Beautiful Bill Act, signed into law in 2025 to solidify key elements and introduce fresh twists, averting a chaotic tax cliff and providing a steadier path forward. Now, zooming into the core shifts affecting all taxpayers, the tax brackets for 2026 are locked in permanently, creating reliability for long-haul planning. Picture this as a tiered ladder where your income fills progressive buckets. For singles, the first $12,400 is hit at 10%, then up to around $50,000 at 12%, climbing higher from there. Not a flat rate on everything, but a smart, layered approach. Pairing with that, the standard deduction has been supercharged and made everlasting too, letting singles shave off $16,100 from taxable income up front, while joint filers get a massive $32,200 break, simplifying life by reducing the need to itemize messy stuff like mortgage interest or local taxes.
Ultimately streamlining filings for countless families. But the excitement doesn't stop there. The legislation rolled out targeted, short-term perks for hardworking folks, especially those pulling extra hours or relying on gratuities. If overtime or tips pad your income, rejoice. You can now deduct up to $12,500 in overtime pay or a generous $25,000 in tips, designed to pump cash back into the economy through service and labor sectors, though these goodies phase out above $150,000 Maggie for individuals or $300,000 for couples, and they're only slated through the next few years, so act fast. Seniors aren't left out either. A fresh $6,000 additional deduction kicks in for anyone 65 and up starting in 2025, stacking atop your standard or itemized claims to combat inflation's bite on fixed incomes. But it's temporary until 2028 and tapers off beyond $75,000 Maggie for singles or $150,000 for joints, vanishing entirely at $175,000 or $250,000 respectively. Shifting to saving strategies, the Secure 2.0 Act amps up retirement options, encouraging bigger stashes for tomorrow. 401k or similar plans now allow $24,500 annually, IRAs hit $7,500, and HSAs offer $4,400 for individuals or $8,750 for families, all elevated for 2026 to combat rising costs. For those 50-plus, catch-up contributions add rocket fuel, an extra $8,000 for 401ks, but a super catch-up boosts it to $11,250 if you're 60 to 63, while IRAs get an additional $1,100, urging max efforts in prime earning phases. Heads up for top earners, though. If your prior year's wages exceeded $150,000, all catch-ups must go Roth style, meaning no immediate deduction but tax-free growth and withdrawals later, a bold pivot to balance the system. Wrapping this up, the essentials boil down to permanent brackets and deductions for predictability, temp worker and senior breaks to grab now, beefed up savings caps, and that Roth mandate for high-income catch-ups. Chat these with your advisor to optimize. Ultimately, this reform aimed to banish uncertainty, but with many incentives on a timer, it begs the question, is this true stability or just a breather before the next wave? Stay vigilant, folks, and let's navigate this together.